in a world where everyone from a computer to a laptop can just buy and sell assets, everyone is chasing returns. And in this case, why don't we chase selling the financial data, right? That seems to be the real investment. So today we're going to talk about that industry, and we're going to use FactSet as a proxy of what the industry is. But don't forget to subscribe. So FactSet is basically a platform. It provides client support and learning, implementation services, business advisory, data delivery, index services, portfolio data management, and transition services. Now, if you're not used to all of this terminology, or you just manage your own investments by yourself, this might not mean much to you, but every time you see tickers and QSIPs and ISINs and ratings and portfolio returns and attribution, there's a lot of data behind that when you slice and dice data. So FactSet is one of those tools that provide all of this slicing and dicing of data, and the numbers financially are wide opening. So we're always chasing returns. In the tulip area, the tulip bubble in Dutchland, in Netherlands, 400 years ago, everyone was chasing those returns on the tulips. Then people were chasing gold in California. People were chasing mercantilism, metals, when the great powers of Europe came to the Americas. People are chasing now cryptocurrency returns. They were chasing NFTs. They were also chasing in the dot-com bubble. Now they're chasing AI. It's always some chasing. But remember that at the end of the day, whoever makes the most money on all these chasings are the ones that provide the tools to chase. So in the case of FactSet, selling financial data, on a global basis, institutional investors represent more than 70 trillion in investable assets. As such, they wield a significant influence over the capital markets, right? But now, to make money as an investor, you have to get returns. But as a financial data company, you just have to sell to those investors. It doesn't matter if the market is up or down. You don't care. You just need more and more people investing so they can use your services. So FactSet is just like what selling shovels in the gold rush was. They made so much money because everyone needed tools to get that goal to actually become rich. But the people that actually became rich were the ones selling the shovels. So selling financial data is the same as selling shovels, and gold is the same as investment returns, right? Companies, hedge funds, they make, 20, 30% a year. They have a bunch of expenses. One of their biggest expenses is platform like FactSet, because it's the whole platform. So why is it so important for data? Because data, you have an entry point, right? As we have electronic markets, every security is modeled. It has a coupon, it has a rating, it has a structure, it has a payment, it has a cash flow, it has instructions, it has maturity dates. All of that data is there. What really makes it useful is when you derive it, when you start compounding it into indices, into risk metrics, which at the end of the day become portfolio analytics, and then you can model your portfolio. Or when you start looking at how inflows and outflows, and then you can start seeing web scraping or sentiment in order to do some quantitative analysis. But you also then, with the data, you can also are able to help research institutions to get the earning estimates or the ratings or so forth. And you can use that data to also have news data, to have breaking news, commentaries, machine-relatable news. So all the data that FactSet and its competitors provide actually are used not only for institutional investors, but to write papers, to create indices, to create analytics, to create sentiment. It's a whole new usage of that data. So they are not only selling to investors, but they're also selling to people that help the investors. So the power of financial data. So FactSet, 19% annually returns for 28 and a half years since it went public in 1996. 10,000 investment in FactSet IPO will be 1.4 million today. Of course, we are using a company that has survived. A lot of them have not, but we just want to show you for those financial data providers that survive, the amount of money they can make. and the S&P equivalent return will be just 130,000. So FactSet outperformed the S&P 500 by a factor of 10. Now, this, of course, doesn't mean anything because you are investing in a business, not in the whole basket. The S&P will never go to zero. FactSet could basically go bankrupt one day. So the comparison is not to make you say, oh, you should just put your money on FactSet instead of S&P. Now we're just saying it's for relative comparison. So, but the competitive edge of FactSet is that 85 is in the 85th percentile for net income margin at 25%, and it's also 92th percentile for for return on equity and at 30%. So this is a middle tier because FactSet is not the Bloomberg of the environment or the Aladdin from BlackRock that every company tries to use, or the MSCI or S&P Global. No, it's just a middle tier financial data company, but outperforms 90% of the largest US industries, which is the firms, which is seen in the S&P 500. So it's very a lucrative industry. So financial data industry has consistently outperformed broader markets, and companies in this space deliver above average margins and returns because they know how to sell, but they also don't have that much costs. Once you model a security, you can sell the same security data to 30, 40, 50, 1,000 people or 1,000 investors, 1,000 companies without really increasing you don't need to maintain that. You just have to open the bridge and connect the data. So investors and professionals in financial data stand to benefit far beyond market norms because, as we said, even if there is a turn down in the market, people will still need the data to assess their risk. So this is just a comparison of metrics of FactSet, MSCI, S&P Global, Bloomberg. Bloomberg is private, right? It's owned by Michael Bloomberg. So revenue, you have net 9 to 10% in 10-year growth. It's a little lower than the competitors. EPS growth is a little lower, 13%. Organic revenue growth is 7 to 9%. Net income margin is 25%. EBITDA margin is 37 to 40%. Return on equity is 30%. Free cash flow for margin is 25 to 30%. And the stock price, 19% since the IPO annualized. MSCI 25, S&P Global 17. MSCI uses a little more of leverage, but FactSet is more conservative in their financials, so you can see how that also shows little less returns. But overall, the picture is that all of these three public financial data providers have exceptional numbers. Now, Bloomberg is, well, you cannot see their financials as much, but they are basically the core. They just have a different way of providing all these businesses. They are just legacy. So I don't really need to invest too much because they are the forefront of financial data. And these are the asset correlations. So as we said, also not very correlated between MSCI, S&P, and FactSet. In the last 10 years, the correlation is less than 0.5. Now with the S&P 500, the FactSet is at 0.64, MSCI 0.64, and S&P Global 0.68. Pretty good returns, 13%, 20%, 16%. This is for the last 17 years. And the S&P 500, of course, only 10%. And of course, there is some risk component. The S&P 500, of course, has less risk, 15% annualized standard deviation, FactSet 23, MSCI 30, S&P Global. So we are here not saying that this is an investment that everyone should go, but that the financial data, it's basically an utility. It's an utility. It doesn't matter how the market moves. Companies still need the data. It's an utility. It's necessary. It's defensive. So I think it's an overlooked industry that people should really pay attention. We know Effusion was just bought by Clearwater Analytics. So more competitors to provide all the data and also a platform. So there's a difference. Bloomberg, what really causes Bloomberg to be amazing is they also have the data, but they also get the platform itself. So people can utilize it, terminal. Wow. FactSet requires all this data from other components, Refinitiv, and so forth, to integrate them into their platform. But still, the way they organize it and compound it is tremendously. So let us know what you think, and don't forget to subscribe.